Hi, this is Alessio. Hope you're well and hope you're keeping healthy and safe. So I'm going to explain to you in this video why the next phase in the financial markets could be one of the most dangerous stages or phases in the markets. And I'm going to explain to you in this video what this could mean for you and also for Bitcoin and also the stock markets in general as well. Okay, so let's begin first of all by doing a quick recap. You may recall about a few weeks ago, I think it was almost last month, I showed you that I was long in the stock markets. I was long both the US and the UK stock markets. And in fact, as you can see here, at the time I made that video, I was in profit by about £50,000. So pretty much from the start of April, we'd been bullish and we'd been long on the stock markets. Again, predominantly in the US markets. By the way, just to let you know, since I made that video several weeks ago, I've been taking profits along the way as well. So I think I took about £17,000 of profit so far as the markets have been steadily going higher. Okay, so why is the next phase in the stock markets could be one of the most dangerous phases in the financial markets? By the way, some of you are probably thinking at this point that when I'm talking about the most dangerous stage or phase in the markets, that I'm talking about this stage here. In other words, the market's going to go down all the way to the lows of March. That is not what I'm talking about. In fact, the most dangerous phase in the markets is in this zone I'm going to show you here. As you can see from this chart, the most risky and the most dangerous phase in the markets actually is between this region, between 3,000 to 3,200. Why? Let me explain this point. So, as you may recall, markets crashed back in March. We dropped by about 34% in the S&P. And pretty much a lot of people got out of the market. The dumb money exited the market. As you can see from this chart, that is exactly when the dumb money said, okay, you know what, that's it, I've had enough. And they got out at the worst possible time. In fact, guys, you may remember back at the time, I was warning that was the worst possible time to get out of the market. Okay, because remember, everybody was afraid. All you had was bad news about the markets, about the virus, about the economy. All you heard, like all you've been hearing for the past few weeks and months about the economy and pretty much everything else has been bad news, right? And in fact, notice that the markets, the financial markets, have ignored all that bad news. And in fact, all our viewers on this channel know this. You know this, that there is no correlation between the economy and the stock markets. Unfortunately, most folks out there don't know this. Your mom and pop investor, they don't know that. And that's because your average investor, your average folks out there, they're paying attention to the news, social media, or indeed, the mainstream media. And unfortunately, the mainstream media keeps repeating this nonsense, this lie, that the economy is the same as the stock market, which by the way, as you can see, is complete nonsense. The markets have rallied despite the bad news, despite all the terrible economic reports, despite the rising cases of the virus and all that kind of stuff. So anybody who's been paying attention, therefore, to the herd, the masses out there, or indeed, the financial news media, unfortunately, they've been missing out on this massive rally, this 30% rally in the stock markets. Again, as I mentioned before, we went long on the markets in our member videos based on a specific strategy that I showed you back at the time. Okay, now here's where it gets interesting. You see, guys, nobody so far has believed in this rally in the stock markets, okay? Pretty much no one has believed in this rally, this nice 30% rise in the stock markets. And that's about to change. Okay, this is where it gets interesting because, guys, markets are not ruled so much by the economy. It's not the economy that drives the market. It's behavior of investors. It's the psychology and, again, the irrational behavior of individuals. It is emotion, it's sentiment that drives the markets. By the way, guys, if ever anybody tells you that the economy and the stock market are the same thing, just tell them this.
Dog, www.shuddy.com. Let's move on here. What are you doing?
Exactly, as Kyle says, just tell them to go to www.shuddy.com. And here's basically what's important for you to remember. I think it's quite likely that in the next couple of weeks, maybe in the next few weeks, the markets are going to enter this specific phase, this zone that you're seeing here on the charts. The zone is between 3,000 to 3,200. And the higher we get in this zone, again, between 3,000 to 3,200, I actually think the most risky area is between 3,100 to 3,200. If the markets get into this zone, which I think is quite likely, actually I think it's quite probable, we're going to enter that zone that we're seeing here. Again, between 3,000 to 3,200, and the most risky area is between 3,100 to 3,200 on the S&P, okay? So that zone that we're seeing here, I think it's quite probable the market, the S&P, is going to enter that zone in the next few weeks. And what's going to happen is that all those folks, the dumb money, again, your average investor, your mom and pop investor who've been basically out of the market, the people out there who've not believed in this rally, the people who've been staying on the sidelines out of fear, suddenly they're going to jump into the market. Why? Because they're going to watch the news. The news is going to be full of headlines. Oh, the market's going above 3,000. Oh, the market's going above 3,050, 3,100. And then they're also going to hear trickles of good news coming in. We've already seen some trickling of good news in the last week or so. Something about a vaccine for the virus coming in through. They're going to hear some positive stuff coming out of the news. Some good economic reports probably going to come out. How so-and-so is predicting that the economy is going to go back into full recovery by the end of the year. All this economic good news is going to come out. And that is the moment. The dumb money out there, they're going to suddenly say, oh, now I believe. So the folks out there who did not believe in this rally, they were too busy paying attention to the herd, again, the financial news media, all that nonsense, all the fear, all the economic bad news, all that stuff, and they missed out. Now, that's going to change. Now, when the stock market goes into this zone you're seeing here, again, between 3,000 to 3,200, they're going to say, oh, I believe now. I don't want to miss out anymore. I want to get in. I don't want to miss out. FOMO is going to set in. And that, by far, is going to be the most dangerous phase in the markets. That is the moment when I, and again, most professional investors out there, are likely to get out. Okay. In fact, I'm getting ready to exit the market. Not completely, but most of my position I'm going to basically sell once we get into that zone, specifically in the zone between 3,100, 3,200. Okay, that zone over there. And by the way, let me just give you an example of the kind of nonsense you're going to hear in the financial news media when we get into that zone. In fact, we're not too far away from that level anyway. And notice some of the nonsense you're hearing already in the financial news media. Here it is.
I want to get to the headline from Morgan Stanley. They are now predicting a V-shaped economic recovery. In other words, we're going right back up again. Art Laffer's with us. Are you on board with a V-shaped recovery? In other words, a vigorous recovery starting real soon.
Economics is my gig, and that is very true. Morgan Stanley's results are exactly what I believe, but the stock market is even a better forecaster, Stuart. And what you're seeing the stock market do right now is bounce back. Remember, it went as low as 18,000, and then it bounced back. The stock market is the single best predictor of the future. The stock market tells us what will be, not what has been. And it's an unbiased, efficient forecaster. And the stock market's telling us this is going to be a shallow dip and it's going to be a quick recovery. And I couldn't be more excited than I am.
Guys, did you hear that? Those guys on Fox Business were just creaming themselves. They're saying, oh my God, oh, this market is so beautiful, so amazing. We're going to go into a V-shaped recovery. This is such an amazing market. Guys, without a doubt, financial news media is, in the words of Anthony Bourdain, the epitome, the pinnacle of douchedom.
The very epicenter of douchedom.
Yeah, that is what the mainstream media and financial news media is. I can't think of a better phrase to describe them. But bottom line is, guys, what I'm trying to say is these guys out there, the financial mainstream media, the financial news media, all they do is they're essentially the trumpets of the herd. All right, if you imagine the herd out there, your mom and pop investor out there, the financial news media is their trumpeter. They're like the guy in the front of the marching band, and they got a trumpet, and they're sounding, oh, the market's going to go back into a bull market now, everything's fantastic, everything's good. And that is precisely the moment, guys, we're going to be ready to get out of the market. We're going to be ready to exit the market at that point. So I don't think we're too far away, guys. I don't think we're too far away. I think that once we get into that zone, that phase of the markets, just be careful. Be very careful indeed. Because again, that is the moment I personally am looking to exit the market. Not completely. I'm going to probably have some position in there, small position. It's always good to have some skin in the game. But the majority of my positions, I'm going to take profits and I'm going to exit the market at about that point. By the way, guys, I'm not saying this so that you do the same thing. I'm not trying to say you should also sell and get out of the market at the same point. No, look, I'm just saying to you, this is what I'm doing for myself based on the risks that I'm seeing at that point. So for the moment, I'm still in. I've taken some profits along the way. I have a stop loss in place. But the main thing is I'm looking at the charts and I'm seeing that the dumb money is going to get interested very soon to get into the market. And when the dumb money, again, when you're a mom and pop investor, again, no offense to the mom and pop investors out there, but when they start marching into the market, when the financial news media bringing them in, that is when you want to get out. Because here's the thing, guys, when the dumb money gets in, that is most likely going to be the levels where we might see a topping formation. I think very likely we might see a topping formation around that area. So I'll be looking at the charts. By the way, just to mention, if the stock markets enter that zone, which I think is quite likely, that could actually put upward pressure on Bitcoin as well. So I think a strength in the stock markets could translate to strength in Bitcoin as well. So again, I still think the correlation is still there, and I still think that a rising stock market could help and boost Bitcoin as well, because both tend to be risk-on markets. I look forward to seeing you guys in the next video update. Cheers. Bye now.